So in this video, we're gonna talk about the base drop supply zone, and we're gonna see what is the market structure behind this supply zone and how you can detect this supply zone successfully on your charts. And in the end, we're gonna go through the examples of the base drop supply zone on the charts. Hey guys, welcome back. So today in this video, we're gonna talk about the base drop supply zone. First of all, let's talk about the market structure behind this supply zone. So in market structure, this supply zone is formed when there is first impulsive move in the bearish direction, as you can see here, and then there is a ranging market for a moment. These small candles represent the ranging market, and this is called the base zone of this supply zone. And then again, after the range, there is an impulsive move in the bearish direction. So this one is drop, then this ranging market is the base, and then again this impulsive move in the bearish direction is drop. So that's why it's called base drop supply zone, and this is the market structure behind this base drop supply zone. Now let's talk about this supply zone in terms of candlestick. In the candlesticks here, as we can see, that this is a big bearish candle with a big body and small shadows. So this represents the drop in the market. And after the bearish candle, or this represents the impulsive move, after that we have the base candle, which has a small body but long shadows. So this represents the ranging market, or the base of the supply zone. Okay, and then after the base candle, there is again an impulsive move in the bearish direction in the form of this big bearish candle, which has a big body and small shadows. So one thing you can notice here is that the impulsive candles have big bodies but small shadows, and the base candles have small bodies but big shadows or long shadows. And also the base zone is not restricted to just one candlestick. There can be more than one candlesticks as well. But the thing is that inside these base candles, the body of the candles should be small and the shadows should be large. Now this high of the base candle is the high of the supply zone, and this low of the base candle is the low of the supply zone. So we can draw the supply zone on this base candle here, as you can see that I have already drawn it. This is a complete pattern that you need to detect in order to detect the supply zone successfully. Now the trading psychology behind the supply zone is that after the formation of supply zone, the market will come back to this zone in order to pick the pending orders which are placed by the institutional traders. Once the market picks those orders, then the market moves impulsively in the bearish direction. So this is a good chance to take short position and put your pending sell orders. After you have detected the supply zone successfully, you can put your pending orders at this position, because we have predicted that the market will come back in order to pick the pending orders. Now let's go through some examples of this supply zone on the charts. So let me just go down. So this is the first example. Here you can see that this is an impulsive candle, or the big candle in the bearish direction, and then there are two candles which have small bodies but long shadows. So these are the base candles, and then this one here again is the big bearish candle, which represents the impulsive move. So this is our drop, this is the base, and then this again is the drop. So this one is the supply zone that we have detected, and the market has come back in order to pick these pending orders here. So once we have successfully detected this supply zone, we can put the pending sell order here, and here you can see that this is a pinpoint entry, because the market came back to pick the pending orders and then moved in the bearish direction. And you can see that market went in the bearish direction, and the bearish trend started from here. In the second example, you can see here that this is a big bearish candle, and then this is a base candle, and again after that this is a big impulsive move in the form of bearish candle. So in this case, the market came back right after the formation of supply zone in order to pick the pending orders, and after that market moved in the bearish direction till this level. Okay, another thing about the base candles is that you do not need to focus on either the base candles are bullish or bearish. You only need to see that the base candles have small bodies but long shadows. The overall size of the base candles should also be smaller than the candles on the borders or on the ends. So we have been working on the indicator using which we'll be able to detect this supply zone successfully, and we'll be launching that supply and demand zones indicator by the end of this month. So using that indicator, what you can do is you can apply that indicator to your charts in TradingView, and you can use it on your mobile, on your tablet, or on your PC, and then this indicator will automatically detect and draw the supply zones for you. Okay, after that, what you can do is you can analyze that supply zone and put your pending orders. And using that indicator, you can also set up alerts through which you will be alerted in your email or also in your TradingView dashboard. So we'll be announcing the indicator by the end of this month. Make sure to subscribe to our channel to stay tuned about that. And let's talk about some other examples as well. Here you can see that this one here is the big bearish candle with the big body, and then these are the base candles, and here you can see another big bearish candle. So this is also a drop, base and drop supply zone. And after the formation of this supply zone, you can see that the market came back right after the formation, and then after picking the pending orders from here, the market went in the bearish direction, okay, or the bearish trend started. Here you can see, notice another thing, that I have drawn the supply zone not on the base candles, okay, because after the formation of base zone, the last candle or this big impulsive candle, the high of this impulsive candle was greater than the highs of the base candles. So in this case, our supply zone will be drawn from the high of this candle, this big impulsive candle, and then the lows of any of the candles, base candles, which has the lowest low. So our base zone will be at this range. Let's talk about another example. Here you can see that this is an impulsive move, and then this is the base candles. So drop, base, and then again this is another drop, and market came here to pick the pending orders and then went, and then the bearish trend started till this level. I hope you liked this video. If you have any questions, please comment down below and I would love to answer them. Also subscribe to our channel so that you'll be the first one to be notified once we launch our supply and demand indicator, and we'll be announcing it on our channel as well. See you guys in the next video. Thank you.